It's been a super show by Tata Steel for the March quarter. Volumes are strong, margins are a lot better. And the international business, which have been in the dumps for long, is showing signs of a turnaround. And what's more, Tata Steel UK has also reached a one-time settlement to close its much talked about pension scheme, a move that could pave the way for a merger deal with ThyssenKrupp. To discuss all of this and more, I am joined by Koushik Chatterjee, Group Executive Director, Finance, Tata Steel. Koushik, the numbers definitely exceeded many of the expectations that investors had, and that's quite showing in the stock price. I mean, would you say that maybe the worst is over for Tata Steel given the kind of quarter we had?
So I would only say that 2015-16 was a very challenging year. 2015-16 was challenging in more ways than one because the market impact on Europe and the rest of the steel industry, including India, was very significant. We had a huge volume of seaborne imports priced pretty unfairly. We had currency volatility which were very significant, especially in the UK. And therefore, I think it called the company to action on structural issues, portfolio issues and improvements within the company at a different scale and order. 2016-17 was the period during which we kind of implemented a large part of that action plan, and I think it was the improvement initiatives internally within the company in Europe, both in the UK and in Netherlands, but more particularly in the UK, that helped in stabilizing and scripting a bit of a turnaround as far as Europe is concerned. The UK losses in 2015 have been very significant. The liquidity impact was very significant. 16-17 we have had a very significant turnaround because we undertook those restructuring. We took away some of the assets which were non-strategic, non-core and not valuable for us. The last quarter is a demonstration of that impact. It is also important to mention that the markets have been much better. There is a synchronized global recovery at this point of time. So markets are better, currencies are more stable, and I think though the volatility still remains, the fragility still remains on a structural basis. Currently the markets are not the cause of the biggest concern as of now. It can be very fickle. There are a lot of interplays that happen between various factors, but I think what helps a company is always its internal strength, and that's what has been the focus in the last 12 months as far as Europe is concerned, as well as in India is concerned.
Koushik, a 30% growth in top line, and as you are rightly saying, I mean, the European operations did play a big part in that. But how sustainable is this? Because there are many who believe that the best for Tata Steel Europe maybe is behind us.
That's always an apprehension when we get a good result. So I'm not surprised by that. But the fact is, it's not about what you define as best. I think I would rather focus on what is sustainable rather than best or worst. And what is sustainable is a performance level which is all weather. Because in a commodity market, in a commodity business, you would have external factors coming in, whether it is on the demand side, which has got an interplay with liquidity, financial system, macros and several other things. So it is a question of building an internal strength in the company which can be all weather. So we can perform when the prices are low or prices are high. We need to ensure that we create a sustainable business. Many of our actions in the last 12 months to 1 year, 1.5 years is been focused on creating the sustainability of the business. We are seeing the results of it, but the journey is not over.
What I mean is, for example, if I come to average realizations,
yes,
you expect that to drop going forward as far as the European business is concerned?
So I think we are seeing a more steadier version of the realizations at this point of time. I think there would not be a cliff drop. It may taper down, but in Europe the price realization is only one part of the equation. because it is the spread between the price realization of steel and the price or the cost of the raw materials. So, it's that spread which is important. So, that spread, just to give you a reference point, was about 300 euros per ton in 2008. In 2015-16, it dropped down to 196. That clearly wipes out the entire market impact of a company. Currently, that spread is in the zone of 210 to 215, That's the level at which it is settled down. So, it is not that it is way beyond, it's not very high compared to the low point. So, neither is it, but it is very far away from the peak.
What will be the outlook for FY18?
I think it will be range bound. I think it will be range bound in the level between 200 and maybe 230 or that kind of range. But I think I can't see that dropping very significantly, neither I can see it increasing very significantly. So, I think we have to realize that if it is within that range, you have to do more and more and more work to ensure that the internal robustness of the company can demonstrate both profits, cash flow and value within that range. And that's the truth as far as commodity cycles are concerned.
Coming to the India business, I'm sure the ramp up at Kalinganagar did help. I mean, what is the kind of momentum that you see in FY18 as far as the domestic business of Tata Steel is concerned?
I think one word before I address directly your question. I think the Kalinganagar project has been a great example of how we could execute the project under difficult circumstances. It took us many years to get it off the ground, but post our execution, the way we have executed has been very efficient and effective. It also the ramp up actually demonstrates the quality of assets that we have. The ramp up talks about the operating skills of the team that we have, and also about the marketing and sales and commercial capability that Tata Steel has. So, from less than a 12-month perspective, we are almost there in terms of rated capacity. We are running at about 200,000 tons per month, which is I think very exciting, because we are also getting significantly new sector products, and we are getting acceptance and approvals of new customers. And I think Kalinganagar is scripting a significant story for Tata Steel going forward.
What's the kind of volumes that you see going forward in FY18 from Kalinganagar?
So, the rated capacity is 3 million tons from a crude steel perspective. So, we are almost there, but I think it will be 2.5 or thereabouts, So, I think between Jamshedpur, which historically has been competitive, in spite of several legacy disadvantages because it's an old site, where our mantra is effectively focusing on structural improvements and doing things differently and doing things better. And I think my colleagues out there doing a fantastic job. I think we have a capability and a foundation now to look at future growth too.
And the fact that dumping from China is on a decline, that also may have helped your cause, right?
So, I think the credit goes to the Government of India in terms of ensuring that the anti-dumping duty process, it took time, but it has been done in a very robust manner, and it will have a positive impact because it's all about playing the competition fairly. I think competition is something which is a certainty in today's life in anything that one does, but it has to be done on a fair basis, and I think India has done it very responsibly, the whole regulatory framework, and therefore I think given the underlying strategic advantages of being India, all Indian players will be in a position to be more competitive in the future.
One worry that many investors have is the fact that raw material prices are going up. What is the kind of outlook you have for the current year? I mean, how do you see that playing out?
I think the raw material prices are at the mid-cycle level. Iron ore is not at 150, which was the peak in 2009 or 10. Coal is a lot more sensitive to changes in the external environment because coal was settled at about 150 to 170 band. In December it went up to 300. It came down again, and that 300 happened because there were regulatory changes in China in terms of number of working days and so on. It came down again to the settled at around 150, 170, till you had this cyclone in Australia, which is seasonal. It happens around that time. It reacts very sharply to supply side issues. But I think fundamentally we are in a broader commodity sense at the mid-cycle level. We are not at the lowest and neither very far away from the peak. So it's low to mid-cycle level is where we are.
On a different note, the fact that your reserves will only, cater to your Jamshedpur and Kalinganagar plant till 2030, is that also a bit of a concern going forward?
It's not that the reserves will.
You have the right till.
Yeah, so it's the transition provisions till 2030. And I think the government of India is progressing on, and the states are progressing on bidding out and auctioning of new reserves. And as and when we have a very good understanding, because we are almost a 100-year-old mining company, so we understand these reserves, we understand the geological risk and opportunities. So we will participate on the fresh bids, and the 2030 there's also a framework that there's a kind of a right of first refusal, if you will, in a different way. But so we will ensure that we have a strategy in place to ensure that our orientation on captives maybe relook differently will continue.
Koushik, coming to the merger talks with ThyssenKrupp, it's going on, it's dragging for more than a year now. Could you give us a sense of progress when it comes to the talks with ThyssenKrupp as far as your European business is concerned?
So, it is a three-stage at least a process. First, we had to get our house in order. From a 2015-16 perspective, we had to work on a lot of things in Europe, in UK. We had to critically look at what kind of investments are required both in Netherlands and in UK. We have focused on a star program in Netherlands, which is going to make the product mix even more premium. So that was the first part of it. The second part of it, which was very critical, is the pensions. And that is a process which takes time because it's a multi-stakeholder process. There are a lot of complexities involved. It's a large scheme. We had to do it responsibly, and we will always do it responsibly. So that's the third part. The second part. The third part is more strategically looking at what are the opportunities in the European market and what can we do to become more valuable. And that's been part, every producer in Europe talks to each other because it's a closed, not so large sector as far as the demand is concerned. So it's been a part of our discussions, and I think it's very hard to look at these complex issues with a timeline in perspective. More important is to look at the robustness of doing things. If we were looking at hurrying it, we would not have got to where we are on the pension.
We were interviewing ThyssenKrupp board member Oliver recently, and he said that ThyssenKrupp is in talks with Tata Steel as well as many other European players. What do we make of that statement?
I don't want to interpret, because I think we are having ongoing discussions. We are evaluating options within the framework that is permitted. We are looking at what could be a consolidation strategy between players, and that's where I would leave it, because anything beyond that will get into a realms of speculation which I don't want to enter.
In fact, what would be the plan B in case the merger doesn't materialize? Because at the end of the day, we are also seeing large-scale agitations in Germany. What's the plan B that you have, especially when it comes to your Port Talbot unit?
So as I said, and that takes me back to the first step, that whether we are looking at a merger or whether we are not looking at a merger, the fundamental priority is to ensure that our European footprint is competitive. So we have our focus with all our stakeholders, whether it is the union members, the employees of the company, the external stakeholders, is how do we make Tata Steel Europe more sustainable, profitable, valuable. That is irrespective of whether you're owning 100% or less than 100%. So even if you do a merger, you'll own something. And if you own something, that's part of the business. So therefore, our priority at the ground level is focused on ensuring that our business is more structurally more competitive and has got a more sustainable, profitable journey. That is agnostic to who owns what.
I understand that, but what happens if the deal doesn't actually materialize? Does it mean job losses at Port Talbot? That's what I was referring to. And part two is you also have to actually repay a large part of your debt. I mean, what's the kind of debt repayment plan that you have worked out when it comes to FY18?
So the first part is a strategy of consolidation is not built on job losses.
Absolutely.
So a strategy of consolidation has to create more value for the business. So irrespective, and if we don't do any consolidation, also the same hypothesis remains true, that you have to make the business more valuable. So I think we have done what was necessary from a restructuring perspective, both in physical assets as well as overheads, including manpower. And that's where our plan is very open and transparent with our unions and the employees. So that's not something that I worry, because we do it in a very responsible manner. People may have anxieties, but I think we have been very open in our communications to them and take them along in a responsible manner as what we are doing, including all this pension issue. The second part of the question is in relation to repayments. So I think next couple of years we do not have any material repayments, and that is an important part, because as you see the journey today, if we are focusing on this journey, we are wanting to create a capability so that we can service all obligations when due. And if we work on this competitiveness of the European footprint, then the underlying becomes a lot more strong, and the credit matrix then looks a lot more stronger, and therefore we should be in a good position to meet all our obligations, whether it's financial or otherwise.
Because right now your debt would be around 70 to 73,000 crore. I mean, going forward over the next 2-3 years, where do you see your debt level at? And in FY18, what is the kind of capex that you are talking about?
So our debt, one data point on debt of 73,000 crores is also reflected that 45,000 or thereabouts of investments have been done in India over the last 8-9 years. So that will
start paying off.
So absolutely. So that if you look at debt as a discrete number versus debt and the deployment, it is important to recognize that we have increased our footprint in India from 4 million tons to 13 million tons. So that there is and increased our capacity on mining, increased our capacity on infrastructure, logistics, and so on. So there is a balance, and there has been investment too in Europe. So there is a element of debt which has gone and gotten invested in productive assets, which would give the earning capacity to meet that. That's one part of that story, and therefore I think we need to look at debt and earning capacity. It's needless to say that we will certainly look at improving our matrices on our capital structure, and I think long term we need to be in the zone of around 1.2. But we are also a growing company, and we have aspirations for growth in India. So I think we will balance the two out, and that's where I see it.
One big stumbling block to any sort of a consolidation has been your huge pension liability at Tata Steel UK. Now that you've reached a one-time settlement, I mean, does it pave the way for a merger deal with ThyssenKrupp, or maybe a consolidation exercise going forward?
I think the pension, our fundamental starting point on addressing pension was that pension was one of the important elements to address to make the UK business more sustainable. because if we see the size of the pension scheme, the volatility of the pension scheme, it would have had a debilitating impact on any restructuring or any improvement that we are doing. So it's necessary to ensure that we address it structurally and not tweak it. And that's why we've taken the time. It's a complex process. It includes many stakeholders. We've taken everybody along. And I think it certainly helps post the regulated apportionment arrangement that the business becomes a lot more sustainable and be an important part of the Tata Steel footprint in Europe. And then we will see what best consolidation options are required or not required. So it depends on how, it's not a one tick answer. So you have many issues to handle, many complexities to address, and we will continue to do that. And we are in conversation, as we have disclosed it publicly.
So you will make an upfront payment of $550 million, and pensioners will also get a 33% stake, right?
So this is part of a regulated process where you separate the existing scheme from the business, and that's the...
And the cutoff is March 31st.
No, the cutoff for the closure of the scheme has already happened. The scheme is now closed. All the active members are part of a DC scheme, a defined contribution scheme. The regulator has to approve it. The PPF has to have the no objection to it, and that's pending. And that will, I think we are in advanced conversation, and we should come to a closure soon. And once that happens, then that process gets completed. The 33% is part of the published principles of the regulator for a RAA process, a regulated apportionment process, and therefore it's not something that it's negotiated between the company, which is Tata Steel UK, and the regulator or the trustees. It is part of that process. Post the RAA, a new scheme will be formed. It depends on the terms and the size and the self-sufficiencies, etc. Post that, the members will be offered an option to remain in that new scheme or go to the PPF. They will exercise their considered opinion, and that's how it will be done. And the 33% will be shared between the new scheme trustees and the PPF. Depending on how many people move to either of them.
Also wanted to get your views on the national steel policy and what does it mean for the demand and pricing landscape?
See, this is a long-term vision document, and for a country like ours and at the stage of the economic cycle or growth that we are in, steel is basic and fundamental for growth, whether it is construction or consumption, or even the whole Make in India program. So I think it is important that the country has a vision for steel, and India has all the competitive levers for making steel competitive compared to any other country in the world. So we are a country which has got the enablers, the resources, the demographics, the demand, and the future. So I think it is a very important document and an important vision to have, based on which I think the Indian steel sector will continue to derive the foundations of the growth in the future, and will plan and execute. And I think Indian steel industry is in a good position to go forward in the future and grow profitably.
The one big worry that is there is the kind of layoffs that we are seeing across industrial segments, including IT, manufacturing. Is jobless growth a concern for the country facing today?
If you look at where the world is moving, the skills becomes the most important element, and I think that's where the initiatives that the government has on skills and skill building will be extremely critical. Because some of the jobs in 10 years or 15 years may not be there. It will be redundant. So it will be replaced by more thinking jobs and jobs which requires higher skills, because generic jobs may be replaced by automation, mechanization, and robotics.
Koushik, coming to my last question, I mean, there's been a change of guard at the Tata Group. I mean, we have a new man, N. Chandrasekaran, who's now at the helm at Bombay House. But will it change the course for Tata Steel going forward?
If there is a course answer to the question that you have said, because Tata Steel management and all of us work towards professionally what's best for Tata Steel. The board is the supreme as far as providing guidance to the company and the management, and I think he being the chair of the board takes everybody's along and in collaboration with the management team develop a future which is exciting and valuable for the company and stakeholders.
On that note, thank you very much, Koushik. Thanks for speaking to us.
Thank you very much.
It's always a pleasure.
Thank you.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/etnow.